Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, July 14th, 5:09 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market, we are in an uptrend. That uptrend got quite a bit stronger this week. Let's check over here on the trend gauge. You can see leaders showing bullish slash uptrend. That's been the case since mid-May. Really, a rally kicked off at the beginning of May and has strengthened since then. Actually, no, I guess it was mid-May. June, a very strong uh, month for sure. But if you sold in May and went away, that was a big mistake this year. Not every Wall Street axiom is accurate. And as far as the five major indexes go, we track them across three time frames in every video that we do. Short term, the 21-day exponential moving average; medium term, the 50-day simple moving average; long term, the 200 simple day moving average. All five of the major indexes are above those respective moving averages. We continue to be extended on the NASDAQ 100 above the 50-day moving average. So what just happened today? A normal pullback after four up days, strong with a strong week, Monday through Thursday. Normal pullback. Just got a little bit too far to the upside this morning, and we a gentle pullback with lower highs and lower lows pretty much throughout the day. Same situation with leading stocks. We saw some gap up and show some short-term exhaustion and then reverse as the day went along, but nothing to really be concerned about. When we check the 21 over 21, we'll talk about the three that I punted and the three that I added, and there were different reasons for all of them. Here are the final numbers for the day. RG8, this is our 8 growth ETF composite, down 1.02%. S&P 500 down just a tenth of a percent. Gapped up 2/10, was up as much as a 0.5%, a little less than a 0.5% early. Faded, held the 4,500 level. As I said, normal pullback. NASDAQ 100, same thing. Very strong week, just barely closing negative. Dow Jones Industrial Average up a third of a percent. Finally got some help from United Healthcare, up over 7% on its earnings report. Mid caps down 9/10. Russell 2000 small caps down a percent. Global diversified 60/40 stock and bond down 0.30. Both global stocks and global bonds down today. In-house GROTECTION down 0.19%, up over a percent early in the day before some of the reversals kicked in. We did multiple sales today for different reasons. We'll go through that when we go through the tail of the tape. And let's get right into it. And since it is a Friday, I will have the staggered daily chart in the front and the weekly chart in the back. In the weekly, you can see about the last 3 months worth of action and what the whatever instrument we're looking at, what it did for the week. So here with the S&P 500, you can see the four strong up days. Higher high today, negative reversal, finished down a tenth of a percent on the day, but for the week up nicely, 2.42%. You can see the breakout above that 4-week base that we had been talking about, and the top of that base, where the expectation now is that that should hold on any pullback, and that's around the 44.50-ish level. So one of the reasons that we took some off today was we got almost 6% above the 50-day moving average on the S&P 500. That is stretched, and we have a tactical. We had a tactical long on the S&P 500 using SPXL, and we just booked our profits on that. And really, we're expecting a pullback, but a pullback that will be used for buying, not for selling. So trying to sell some into strength for the most part. And again, you'll see when we go to the tail of the tape, but looking to add some things back. as they pull back from overbought. Nasdaq 100, very similar chart to the S&P 500, higher high reversal, down barely on the day, up a nice 3.5% on the week, also breaking out from its 4-week base. Good stuff there. The rebalancing, we're expecting the final weightings to come out this weekend, and they take effect a week from Monday. But obviously, the index survived quite nicely. Some of the bigger stocks varying in their strength. The Big Seven, what the Nasdaq is trying to do is to make the index, the Nasdaq 100, less top heavy, and we'll see how that works going forward. Let's go to the Dow, which showed relative strength today, as I said, mostly because of United Healthcare. It hasn't broken out. It's at the top of this range, a 5-week base here showing. I would not be surprised at all if the Dow started showing some relative strength uh, as some of the earnings reports come in. It really just does not stay this week on a relative basis for that long a time. This is actually rare, almost 3 months. It is at the top of this range of breakout above this 34,700 level that is sustained, might get it started, and it might get some help from some of these higher priced stocks that have been lagging because it is a price weighted index. Let's go to mid caps. The MDY ETF up 2.7% on the week, down 1% today after 5 straight up days, just giving some back. Normal, still above the ADMA. Can't complain when something's above the ADMA. Like I said, normal pullback, not concerning. IWM up 3.7% for the week, down 1% on the day, very similar to mid caps, holding the breakout, this 189.24 pivot. We would expect that to hold on any pullback. And you can see the ADMA now has made it up to around that level. So that will provide an additional level of support should we pull back that far. How about the VIX? Indexes were down today, but the VIX was down also. Maybe because yesterday we saw indexes up and the VIX up. So just reversing that, but down 2% on the day, near the bottom of the range, below the 21. Nothing wrong with the VIX at all. Let's go to the dollar. Dollar now strongly working in the bulls' favor, but after 6 straight down sessions, moving from the top of the range to the bottom of the range, might be time for a bounce. This is another reason why we took some off, expecting a bounce in the dollar, which is generally bearish overall for stocks. Dollar down 2.16% on the week, slight bounce for it today. How did this carry over to precious metals? We'll start with silver, which was very strong this week, up almost 8% on the week, up 0.35% today, very clearly breaking above the 50-day moving average. Let's go to gold, GLD, up 1.55% on the week, down 0.3 today. This can't get through this declining 50-day moving average, so that's acting as resistance for right now. GDX, we hold NUGT, which is the 2 times GDX. It was up 8.5% on the week, busting through the 21 EMA, which has now curled up, also busting through the 50-day moving average. We would expect that 50-day moving average to flatten out, turn, and provide support on any pullback, reinforcing this breakout on GDX. Got some decent gains in this in a 3-day period. Let's flip to Bitcoin. Giving back all the gains and then some. This is Bitcoin futures after the announcement yesterday. So maybe some short covering, maybe some irrational exuberance over the Ripple ruling. Down just slightly on the week, down 5% today. The Bitcoin stocks that we covered last night, we're not going to cover them in this video, but we're keeping our eye on all of them to see if those can set up. They're very much extended at this point. Let's flip over to bonds. We'll start with the broad bond index, BND, up 1.5% for the week, down 0.5% today. Normal pullback back below the 50-day moving average after a strong bounce in bond prices, which means a pullback in bond yields, which you'll see in a minute. TLT, the 30-year, Also up on the week, down on the day. Again, after 4 sessions up, just giving something back. Let's go to the 30-year. The long bond yield, very clear failure of the breakout above this 40 level here. Did bounce at the 50-day moving average, down 2.75% on the week. TNX, the 10-year yield, also failed this 4%. Big move down for the week, down 5.7%. Very clearly a failed uh, breakout of the rate and back into the base that it had carved for about 4 or 5 weeks. So those are all, that's the inter-asset correlation that we do with every video. Let's go to the tail of the tape now. You can pause it. I'll hit the highlights. Dollar favorable, stochastics favorable, NASI, McClellan Summation Index favorable, failed breakout on bond yields favorable. AAII bulls actually dropped 5 from last week, uh, slightly above the historical norm, but hey, if we're just getting started with a uh, strong bull market, we'll take that. Uh, News on the day, Fed Watch update. In 2 weeks, July 26th, the FOMC, 96% chance that they're going to raise by 25 basis points, but then uh, the Fed fund futures are pricing in a pause for the rest of 2023. Possibly one of the reasons why we've rallied as much as we did this week. Day count up 4 with one consolidation day, 30 days since the breakout. So 30-day rally, 4th day above the 80 EMA, 34th day above the 21 EMA. Just getting a little long in the tooth. Another reason why we took a little bit off. NASDAQ 8% above the 50-day, normal pullbacks, as I said. Checking the sectors, healthcare, builders stay very strong. Staples up today, consumer discretionary up also. On the downside, oils and KRE. This is why small caps and mid caps lagged. Very common. Bitcoin and the whole Bitcoin complex down, semiconductors down, cloud stocks down, gold stocks down. So in-house, we did some offensive selling on SPXL. I mentioned that. Also offensive selling on Nail. And basically, these just got too extended from their 21-day moving average, more than 3 ATR extended. We keep eye on how extended our holdings are, and 3 or more ATR from the 21 EMA is a very reasonable place to take some off and look either to add on a pullback and leave some to continue to run if it's going to go higher. It's a reasonable risk reward either way. So we trimmed SMCI. I will show these charts when I go through the 21 over 21. We trimmed Nail, extended. We sold Cat. I'll talk about that in a minute, and did defensive selling on NRGU as that had a negative reversal and was down big on the day. The bottom line, we reduced our adjusted beta from 2.33 to 1.77, and the bottom line for the week after 4 up days, normal pullback from extended levels. So let's get to the charts, and we'll start off with what we punted this week. And let's start off with Caterpillar. Now, there's absolutely nothing wrong with this chart. In fact, it looks pretty darn good. But every time we buy something, we write down where the S&P 500 was when we bought it. We also are aware of what the situation is with the market when we bought it. So when we bought this, the 4th sector to show strength was industrial, so we decided to ride that. We bought it around back in here, pulled back for a couple days, ran up again, pulled back again, had a nice 5-day up run, nice inside day today on lower volume. Again, nothing wrong with this, but it didn't do twice the S&P while we held it. And when you're an O'Neill disciple looking for leading stocks in leading sectors, we at the worst want 2 times the S&P 500. And is Caterpillar going to give it to us? We always talk about the N in can slip. Does Caterpillar have anything new that is going to absolutely make it be a must own and have it do double with the S&P 500? Maybe, But if you've got a maybe on the end, I don't want maybes. I want leaders. And there's another industrial stock that we're looking at, Generac, that has in our opinion, a better outlook as far as whether or not it's going to outperform the S&P 500. So if Caterpillar is just going to be a market stock, we don't want market stock. We want market leaders. If we want market stocks, that's why we have half of the portfolio in SSO and also in SPXL until today when we trimmed it when the S&P got 6% extended from the 50-day moving average. So Caterpillar cut, sold. Um, Not being cut because it didn't belong on the 21-21 list, but there's just some stronger names setting up now that offer bigger upside, in our opinion. And we have Generac, GNRC, representing industrials in the 21 over 21. So that was the first one that we cut. The second one that we cut, I explained earlier in the week, chat. Now, I like the way that this is set up. Uh, but I don't believe that it's going to outperform QLD after a closer look at it. Initially, when I looked at it, I was like, yeah, AI. I like how it's top heavy with the big AI stocks, but so is the NASDAQ 100. And we sold it down here around the 21, and we sold it Monday when we were starting to pull back and that news that we had on Monday and all of those big Nasdaq stocks were selling off. So we sold it lower than where it is now, but I don't think I'll go back to this. And the reason I won't go back to it is because I think I could do better with QLD or an individual AI type stock, whether it's a semiconductor like we own Nvidia or a software stock. There are several of those that we're sizing up. So I think I can do better than chat. So that's why chat was punted out of the list. And then finally, one that was punted on weakness was Palo Alto Networks. Now, this was a very nice leader, had a beautiful 6-week run along the 8 EMA, started to get a little tired last week, breaking the 8 EMA for the first time, and then a big selling bar down 7% on 173% above average volume on the report that Microsoft is trying to provide a competing product. This is heavy selling of a leading stock. Now, if it rebounds and gets right back above the 21, that would be great, but that's not what we saw. We saw 2 days of a rebound, both failing into the declining 21 on lower volume than the sell-off did. Down 2.5% for the week. It still looks great on the daily chart, but this may need a base after hitting pivot plus about 22%. May need a base again, closed basically just barely below the 21 EMA. But again, we've got dozens of stocks banging on the window to get into the 21. And after this heavy sell off like this, we're just going to move on. So those are the three that were punted. Let's go now to the three that were added. Those will be the first three that we show. And we're going to start having this week earnings season kicked off. It normally kicks off with the banks, but it also kicked off with the first of three stocks added this week, AEHR. We've been tracking this for a while. It's in the silicon carbide industry. They provide test systems for semiconductor companies. Silicon carbide is in demand in EVs and other industries, up 18.2% today on 555% average volume. This absolutely has my attention. Now we'll apply gap rules to it. We would expect a gentle pullback into the ADMA, and we'll see if it offers a point to get in. But a big breakout on this on volume to new highs, breaking out on the weekly chart, as you can see. There's going to be several of these over the next couple of weeks as we go into the heart of earnings season that are going to get added to the list, and some other weaker stocks will get punted. And I mean, just look at it this way: we think that AEHR has better upside than Caterpillar does. Different industries, but understanding that growth stocks are working now, we want to be in the best of the best. So AEHR, the first one that was added. The second one that was added is Coin. I talked a little bit about this yesterday. This does have a heavy short interest. but it didn't give back much after gaining 24.5% yesterday on really big volume yesterday, 295%. Today's volume, half of that. Got a little too far extended and then pulled back. Power from the pivot indicated with the 20+% gain. It's got the N factor with this. The expectation is that Bitcoin ETFs are going to bring a lot of money back into the crypto industry, and this has a potential for leadership. You can see up 34% on the week, a little bit of a pullback today. And again, it's risk reward, and we're looking for the leading stocks with something that has the N factor. The third one, GDX, we own Nugget, but we're buying Nugget based on the chart of GDX and the underlying stocks that are in GDX, because Nugget is a 2x ETF for this, and this is looking great, up 8.5% on the week, reclaiming the key moving averages, and we're actually looking to add to this position. It went up pretty quickly after we bought the first piece of it. We're looking to add to it, but let me show now Nail and how extended this was from its 21-day moving average. 18.2% extended. It's over 3 ATR. So we sold part of Nail on Wednesday, sold the rest of it today, booking over 20% gains in this. That's pretty good for 5 days work, expecting a pullback. Tracking this based on ITB, which also is extended, very extended from its 21 EMA based on its ATR, 5 straight up days, 6 straight up days. Looking for a pullback in these, very strong sector, but selling into strength on this. Let's talk about the other sales too. Okay, NRGU, we trim this. Caught the breakout okay at the right time. Wasn't looking for a bar like this. This should have held the 350 level on the pullback. It did not today, so we sold half of it. We still have we still have our original buy, which is underwater, but it did stop on the 21-day moving average. Let's see, SMCI, we'll get to that momentarily. So moving on, those are the 3 new ones that were added this week. The rest of these carryovers from last week. If it's got a red flag here, it means we own it in GROTECTION. That's our flagship portfolio in-house. Tidewater, very clear, leading oil and gas stock. Generac, this is the other stock that we're looking at in the industrial sector. Gentle pullback the last 2 days. So big volume on these 2 selling days, but even bigger volume on these 5 up days as it completed the right side of this base before pulling back. 2 lower volume pullback days, the last 2 relative to the selling or the buying, 2 days of buying earlier than that. So we've got a close eye on this. You can see the 3 weeks formation that it's forming on the weekly chart, up 5% for the week. SMCI sold this at 299.50 today into strength. It was over 3.5%, 3.5 ATR extended from its 21-day moving average, just a little too far. Riding the ADMA up, 6 straight up days. Livermore area around 300, which is a typical spot for stocks to fail. So we just took half of it off and booked 30% gains on that half. Weatherford, another strong oil stock, consolidating nicely over the last week. Dave & Buster's continues to ride the ADMA higher. MongoDB, not able to make any progress above this 400 level, but then again, we did pull back today. It did have a bit of a shakeout earlier in the week, but beneath the 21 EMA before finishing at the top of the range. That's what strong stocks do. Got our close eye on this for position in the portfolio, but doesn't look like it's ready to go yet. Unity Software, big negative reversal today, undoing most of the gains that we got in it yesterday. We bought it at the end of the day on Wednesday. Still have a tiny gain in this. Looks better on the weekly chart than this choppiness on the daily chart, and that's because of its high ATR. Toll Brothers continues to trend higher along with building stocks in general. Tesla coming into earnings next week, making highs going into earnings, just looks great. It's one of the big market leaders. Live Nation continues to just chug higher along the 80 EMA. Dynatrace, you can see how it made a higher high and held that higher high after a 6-7 week base on the weekly chart here, clearing this 53 level. We've got a 6% position in this. Celsius, finally with a close over 150, maybe that can open it up to some stronger upside. Now, note how far it is from the 50-day moving average, but it touched the 10-week moving average today. That's why we always, or this week, that's why we always look at both of these charts. That 50-day moving average at the 140 level was right around the bottom of this 5-week base that it's building. And the reason why it touched the 10-week before it touched the 50-week is because of all these high closes in its range over the last 10 weeks. Because you just count the last 10 of those candles on the weekly chart, whereas you're counting all 50 on the daily chart. So if on Friday it closes at the high of the week, your 50-day moving average is going to be much higher than the 10-week moving average is going to be higher than the 50-day moving average. Uber continues to act very well, negative reversal today, but made a higher high above this range that it broke out of. ELF continues to just trudge higher, very strong stock. Intuitive Surgical accelerating to the upside, looking good. DraftKings, I talked last week about how this is on the list, but I probably wouldn't buy it. And all I did was make it mad. So the pattern before this had been up and then pull back, up, pull back, up, pull back, up, pull back. Now it just really went up and kept going. And now just an inside day here. Very clear breakout on the weekly chart, up 14.6% on the week. And this is very typical of the change in character that we saw this week with some growth stocks that have been failing on their breakouts over the last 6 to 8 weeks. This week, getting it done and just accelerating to the upside with volume. Ferrari, there's no, as I always say when we show this chart, there's no recession for the uber wealthy. I read they've got a 2.5-year waiting list for a Ferrari, just keeps chugging higher and higher. And finally, number one on your list, number one in our hearts, NVIDIA. Uh, Ugly negative reversal today off of the 481 level. So went from let's see, went from up like $13 to down $5, but got very extended, leading stock, kind of typical behavior. Don't like to see the higher volume. It's a leader. We give the leaders, especially when they're big liquid, true market leaders, we give them the benefit of the doubt. I didn't sell any of it today on the pullback, as opposed to SMCI, which I did. I don't consider it anywhere near the leader that NVIDIA is, although it's arguably a stronger stock. That doesn't necessarily make it a leader. It does have the AI factor, and I'm talking about SMCI now. So does NVIDIA. But when something moves as violently as SMCI does, that's another reason why we took it off. It has a much higher ATR than NVIDIA does. And that is going to wrap your 21 over 21 list and also wrap up this video for the week. Remember, it's not how much you make in the markets, it's how much you keep. Our flagship portfolio is called GROTECTION. We grow assets during market uptrends. That's what we're doing right now. Another reason why we did some offensive selling is we just had our best week of outperformance versus the S&P 500 all year. I know from historical purposes that can continue, but normally it continues after a little bit of a pullback when we get extended. That pullback maybe started today. Maybe today was the only pullback you get, but we'd like to sell into strength when we get the opportunity to do it, and then look for better opportunities for lower risk entries in emerging leading stocks, and just moving some of the money around outside of our core position. So again, it's not how much you make in the markets, it's how much of that you can keep. We did the keep part last year. We're doing the make part this year. But as always, we know where our stops are and everything so that we don't give back the gains. And with that, I'll wrap up the big show for the week ending July 14th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great weekend.